Okay, welcome everyone to today's last presentation. My name is Stefan Knutsson and I'm an equity analyst here at ABG. And with me we have Bygghemma and Adam Schatz, CFO for Bygghemma. The floor is yours.
Thank you. Good afternoon. It is my pleasure to be here today and present Bygghemma Group. I'll kick it off with some quick facts. We're listed on Nasdaq Mid Cap. We have a market cap of some 5.3 billion SEK, and we're the largest listed consumer e-commerce company in the Nordics. We have a market share within home improvement, which comprises our two segments, DIY, do-it-yourself, and home furnishing, which is approaching some 30%. And on the back of this dominant market share in the Nordic region, we are also the largest European pure-play retailer, online retailer within home improvement. A significant share of our sales comes from our own brands, over 40%. So we really combine the two hallmarks of a sustainably profitable e-commerce company. Namely, we dominate the segments that we operate in, and we have a significant content of private label in our portfolio. Our financial history demonstrates the strength of our model. We have grown by 38% per annum in the past 3 years, with industry-leading profitability and cash flow generation. And our return on capital employed, excluding goodwill, stands at some 20% and really illustrates the asset-light business model that we have. Today we'll talk about the market that we operate in, the home improvement playing field. Next, I'll go into the vision of Bygghemma Group and the key strategies that we pursue. Then I'll talk about the financial performance before we round it off with some questions. So launching into the market, the home improvement field. As you can see here on the right-hand side of the slide, the home improvement market is the third largest consumer market in the Nordics by size. It's worth some 230 billion SEK. Only food and drink and fashion broadly defined are bigger consumer segments in the Nordics. At the same time, as you see on the left-hand side, the online penetration is still relatively low within home improvement. It stands at a combined 8%. So market analysts are in agreement that the online penetration will continue in the years to come, and it will be reaching levels that we today see within consumer electronics, i.e. some 30% of this market is expected over the next years to move online from offline. And analysts agree that the market should grow over an industry cycle by some 15% per annum. So it's a very large market, 230 billion SEK. With the 8% online penetration, that means that some 19 billion of that market today is online. And with a 15% per annum growth, that means that the online share of the market will roughly double within 5 years, meaning that in 5 years it's somewhere just south of a 40 billion market. Bygghemma Group has historically grown faster than the market has grown, but if we assume that we would grow from last year's 5 billion in line with the market, then that means that we would double in size in the medium term. Layering on top of this, we have been growing faster than the market organically. We've also made a number of acquisitions since inception in 2012, and we plan to continue executing on an M&A agenda. So we see that the 10 billion SEK really is a goal that is pretty much in our reach in the years to come here. Summarizing, we operate in a very big market, and it's a market that we dominate today when it comes to the online share. And the online share of this market is growing rapidly. So a little bit about Bygghemma Group. Our vision is that we make living easy. We execute on this vision through 4 key strategies. We operate in product segments that are actually somewhat complex, such as doors, windows, heat pumps, and what have you. So our strategies aim to make it easy to be a consumer in these segments. The first of these strategies is that we want to continue having an unmatched product range. To have an unmatched product range is a key growth driver because it allows us by far the biggest share of organic traffic online within our segments. It also means that we have a very significant cost advantage when it comes to the inorganic traffic. So through the organic and inorganic traffic, we dominate Google today, and that's a key driver for growth. When we started this year, we had a product portfolio of some 350,000 unique products or SKUs, and we've expanded that rapidly during the year. Today, we stand at more than 500,000 unique products, and we really see no limit to the continued expansion of the product assortment. The next strategic pillar is scale. Being an online retailer means that a significant share of sales comes from products with a high degree of price transparency. So in order to be competitive and to be able to offer the lowest prices in the market while remaining sustainably profitable, scale is obviously key. Scale is also important because it allows us to have a significant share of sales coming from our own products. Within the home furnishing segment, a vast majority of sales is private label, but also within DIY, where well-known external brands are the bulk of the sales, we are increasingly introducing our own brands into the mix. And this means that we can offer customers excellent products at very competitive price points while maintaining a margin profile that is very interesting, since our own brands typically have a higher both gross and fully loaded contribution margin. The next strategic pillar is everything to do with the digital experience. And this we address in two main ways. One is to have fast, responsive, beautifully curated websites. And the other is to layer on top of these websites modern technologies, such as, for instance, we have a price mechanism that allows our prices to be adjusted up to 4 times per day, depending on competitive moves in the market. We also apply machine learning in order to automatically categorize the very large product assortment that we have, and also to determine how and when products are exposed to consumers, so that it is easy for customers to find precisely what they are looking for in spite of the breadth of the product portfolio. The final strategic pillar is the physical infrastructure that we have to support everything that is digital. We have a team of customer service experts. We have a team of product experts that are available 7 days a week, 14 hours a day. We also have an extensive network of showrooms, some 80 showrooms across the Nordic region, where customers can come in and get advice and look and feel our products. And finally, we also have a portfolio of services that go hand in hand with the products that we sell, and I'll come back to those in the next slide. So the strategies are devised to make us move closer each day to delivering on the vision of making living easy. Here you see on the left-hand side the geographic footprint of the group. So we started out in Sweden, and then we entered Finland and the other Nordic countries. Today we are the leader in each of the Nordic countries. We are quite dominant in Sweden and Finland, and we continue to grow also in these countries. In 2018, we entered a number of Eastern European countries through an acquisition. And these countries are less mature than the Nordic ones. They are at a maturity level online where the Nordic countries were perhaps back in 2012 when this journey started. And that means that we have fantastic opportunities to grow, and we're growing at almost triple-digit rates in these fast-growing economies. On the right-hand side, you see the ecosystem that we increasingly focus on offering our customers. The product portfolio with the well-known external brands, but also our own private label brands, is a key component there. But we also have the matching infrastructure with the customer service presence and the product expert presence, as well as the showrooms. And we have the matching services revolving around delivery on the one hand side, but also installation, which we're rolling out. We have begun in Sweden and offer installation on a very significant part of our DIY portfolio, and we're now also rolling out installation services in Finland. We meet our customers through a number of customer-facing destinations. Some of these destinations cater to the customers that want this all-inclusive experience where they can literally find anything within the segment that they're interested in. For instance, Bygghemma.se is such a destination. while other of these destinations offer a more curated and specialized experience to customers. For instance, I can mention Stone Factory here within tiles and bathroom products. Having this breadth of customer-facing destinations allows us to offer the venue for our customers where they want to interact with us. But it also means, coupled with the extensive product assortment that we have, that we manage to dominate Google search. And that's a key factor for driving growth. One of the things perhaps that hasn't fully kept pace with the rapid development of the group is our corporate identity. As I've mentioned already, we started out with the Bygghemma.se business back in 2012. And we have since added a whole new segment, the home furnishing segment. We've also rapidly expanded into the neighboring countries and now Eastern Europe. And as you see here, our corporate name as well as our corporate logo draws still heavily on the Swedish DIY business of Bygghemma.se. We have thus embarked on an upgrade of our corporate identity, and we haven't launched it yet, but just to give you a teaser of the direction that we're moving in, it will be looking something like this, and we're launching it in the first quarter of 2020. And we think that this new corporate identity will help us better convey the Bygghemma Group story to our shareholders, to potential new shareholders, as well as from an employer branding point of view. So let's have a look at our financial performance. Our financial history shows the strength of the business model. Here you see on the left-hand side net sales, in the middle EBIT, and on the right-hand side cash flow generation. And we have, over the past 3 years, grown net sales by some 40% per annum. We've grown EBIT by 60% per annum, and we've grown operating cash flow by 30% per annum. And looking at how the business is developing in more recent quarters, we're quite convinced that this journey will continue, yielding a high growth with good profitability and good cash flow generation. We have 4 very strong quarters behind us. And the very latest quarter, the third quarter of 2019, was no exception. And I wanted to share with you some quick facts about the delivery of the third quarter of 2019. On the left-hand side, again, is net sales. In the middle is EBIT, and the right-hand side is cash flow. So we grew in the quarter by 31%. That growth was more or less equally divided between organic growth and growth from acquisitions. We had a nicely leveraged P&L where we had an EBIT growth of more than 100%. It was the highest EBIT delivery in a third quarter to date. We came in at 82.5 million SEK. And on the right-hand side, you see the cash conversion, which year to date stands at 96%. We have a target to convert 100% of EBITDA into operating cash flow on a full year basis, and we're well on track to delivering on that as well. So all in all, a very strong quarter. We had strong growth in DIY of 26%, and the home furnishing segment, not least on the back of steep growth in Eastern Europe, grew by 41%. And both segments are really driven by the offline to online migration, as well as organic market share gains, and finally, with adding in a mix of acquisitions on top of that. The group is growing and developing, and a couple of recent developments we believe will continue also into the future. So let's quickly look at those. We have the geographic mix first, where we started off in Sweden, as you know, and we've now expanded into the neighboring countries as well as to Eastern Europe. And over this period from 2016 to the LTM Q3 column all the way to the right here, you see that Sweden has grown very nicely over this period by 21% per annum. But the geographies that we've entered into more recently have grown even faster. So the reliance on Sweden has diminished over this period. It stood at 75% of net sales in 2016. And on an LTM basis now, it's down at 57%, which makes us then less dependent on macroeconomic conditions in any one country. So a nice net sales mix in terms of geographies. And the other thing that is also changing is what I've already touched on a bit, is the private label share of net sales, Within the home furnishing segment, it is essentially all private label. Within DIY, the majority of sales is and will continue to be well-known external brands. But we are now in a position to grow the share of private label, and we've set ourselves a target to double that share from 10% roughly today to 20% in the near term. And we have a number of own brands. I just wanted to say a couple of words about Bathlife, which you see down there. It's our flagship brand within the bathroom category. And since 2014, we've grown Bathlife sales by 70% per annum. We have a strong position now in the bathroom category in Sweden. It's becoming really strong in Finland as well. And we're rapidly growing in Denmark and Norway. And what is special for us with our own labels is that, as Bathlife demonstrates, we are able to sell those in multiple geographies, whereas the external brands typically are country-specific. And also, quite importantly, the margin profile on our own brands is favorable to that of the external brands. So these are two developments that we envisage will continue into the future. Summarizing, we are the clear Nordic online leader within home improvement. We have a very strong position within both our segments, approaching a market share of some 28%. We have a net sales mix which is very good today. We have two segments that are more or less of equal importance to us, and we have a geographic mix that is also very sound. And finally, on the right-hand side, you see that we have a history of rapid, profitable growth. And to the far right, here you see on an LTM Q3 basis, we have an EBIT margin of 5.1% and net sales of 5.8 billion SEK, to be compared with just shy of 5 billion at the end of 2018, again demonstrating that we're growing rapidly and we're on track to reach our medium-term target of becoming a 10 billion SEK net sales company. Thank you.
Thank you very much, Adam, for that. And just to start off, you mentioned that the majority of your sales, some 95%, is generated in the Nordics, but you see that your sales in Europe is growing fast. How do you view the potential? And if we look 5 years ahead, how much do you see Europe stands for?
So we haven't set or communicated a target for the share that will come from the outside of Nordics geographies, but the Nordic geographies can be expected to grow by some 15% per annum organically. With some acquisitions on top, it's reasonable to envisage growth in the 20% at the 20% level. In the countries that we've entered into in Eastern Europe, we have growth far in excess of that, some 70% roughly. So it's clear that from the 8% that these new geographies represented in the third quarter of 2019, they will be a significantly larger share in the period to come. But again, we haven't communicated a specific target.
And how do you view the competitive landscape in first the Nordics and then the rest of Europe?
So starting with Nordics, we have some very strong competitors, but since we took charge of consolidating the online market back starting in 2012, we essentially have no online-only platforms today. There are some smaller niche players within certain categories, but the main competition in the Nordics comes from the online offering of the large offline players. And they're obviously very good at what they do, but they are also sort of good competitors because they're interested in profitability and they are pretty disciplined in the way they operate. So that's the landscape in the Nordics. In Eastern Europe, we have no direct competitors who have yet at least assumed the same business model that we have. We have own delivery to the end customers in all of the Eastern European countries that we serve. So it's actually sort of the mix of a sourcing apparatus with sourcing from Eastern Europe and China, and then the logistics value chain that delivers to end customers. So it's a very strong model, and at least yet we don't see anyone seriously challenging us with that same model.
I'll throw out some names first. IKEA, for example, who is really strong when it comes to kitchen renovation. Do you see them broadening their expertise in that area to more be a competitor of yours?
Well, obviously IKEA is a fantastic company. They also have a very commanding market share overall when it comes to their segments, offline and online combined in the Nordics. So roughly they have a market share in home furnishing of some 50%. And the strategy that they've been actively pursuing in the last couple of years is to move an increasing share of total sales from their offline franchise into the online side. And I think it's quite clear from the statistics that they deliver that they're doing that quite successfully. But what is essentially happening is that the 50% market share remains. It's the composition of how they arrive at that changes. So that's how we see IKEA today.
And if we talk about Amazon, for example, how do you view the landscape changing if and when they enter the Nordics and Sweden, for example?
So it seems today it's a guessing game. When will Amazon enter the Nordics? And it's been a guessing game for a while. And I think the flavor of it today is that they will establish a logistics presence with either northern Germany or southern Denmark as the base. And I think it's clear that they are now also translating their website to Swedish and to the other Nordic languages. So they are sort of entering. But it doesn't seem that they're entering with fulfillment centers in the Nordic countries, which means that they probably won't be able to offer Prime, which has been a key success driver for them in other countries. But I think even more importantly, the segments that we operate in are not typical Amazon segments. So we operate again in segments that have big bulky items, quite difficult from a logistics point of view, but also complex items such as, for instance, windows. Is not an easy sort of one-click buy item. You need product experts to talk to. When it comes to the private label side of our business on the furnishing side, customers typically want to be able to see these products before they buy them. And so we have our network of showrooms. And that's not the way Amazon operates. So even in countries where Amazon is really strong, Germany or even the United States, they haven't been able to create a commanding lead within the categories that we focus on. So they will certainly come at some stage, and I'm sure that they will become a bigger player in the Nordics than they are today. But we don't think they will seriously threaten the categories that we operate in.
Okay. And we've seen some strong growth, partly driven by acquisitions. What type of synergies are you usually achieve when you do an acquisition?
So the first focus and the second and the third focus of unlocking synergies after acquisitions is to do with sales synergies, accelerating growth. So as I mentioned, having a broad product assortment is a key factor for us. So when we acquire companies, we tend to acquire companies that somehow complete our product assortment within the niches that they operate. For instance, we bought Lampgallerian in the second quarter with a very strong product assortment within lighting. And what we do then is that we take these products and we enable them to be sold on the very many customer-facing destinations that we have, massively expanding the reach of these products into the market. So the main focus of synergies in the early days, at least, is synergies that enable us to grow faster. Then, of course, there are also cost synergies, and some of the given ones are synergies to do with sourcing, to do with suppliers, for instance, logistics partners, where we, as the biggest player in the Nordics for delivering bulky goods to end consumers, we have quite a lot of bargaining power, and typically the companies that we buy have supplier agreements that are less favorable, so it's quite easy to change those.
And the last question on profitability, two important factors, the return rates and the average volumes that the customers orders. How do you see that development in Bygghemma?
Thank you. That's actually an excellent question. So one of the key reasons for the strong profitability that we've shown in the past 4 quarters is that we've been able to drive average order values up. And the mechanism behind that is that to deliver, for instance, a sofa, on a pallet costs exactly the same when the sofa is a 5,000 krona sofa as when it's a 3,000 krona sofa. So moving customers to higher order values means that we have this very nice margin pickup. Today we are at average order values that we're quite happy with, so I don't see average order values moving significantly up from this level. But we do have good opportunities to continue driving our EBIT margins up, and the three main sources that will help us achieve that will be the ongoing segment mix, where home furnishing is slightly smaller today but enjoys higher margins, and the underlying markets between home furnishing and DIY are roughly similar. So home furnishing, in all likelihood, will continue growing faster than DIY. Next, within DIY, we have our own brands, private label, that have a better margin profile than the external brands. And as I mentioned, we strive to double the share of private label in DIY. And finally, with size, we get operating leverage. So that's the third component that will help us drive EBIT margin up from the current levels.
Okay. By that, I would like to thank you, Adam, for today's presentation.
Thank you.